All right. Today I want to start out looking at TLT. Earlier in the year, I drew this arrow that I thought TLT would bounce up towards $90. And remember, this is the 20-year treasury bond. So if TLT is going higher, that means demand for bonds is increasing, which drives the yields lower. And as those yields come down, the rates come down, and that easing is very bullish for the stock market. And that is why I have been very bullish on the stock market this year, because simply just reading the bond market told us there was a very good chance with high probability this was going to occur. And as you can see, it worked out very well. But from here, I want you to know that the bond market is sitting at a resistance zone right here, right around $90. And anytime we get to a resistance, especially while we're in a downtrend, you don't blindly assume that the trend is going to switch from a bear trend into a bull trend, which means there is going to be the chance that this is another lower high before another lower low. And that's the saying that the trend is your friend. So as long as we have a bear trend, which you can tell because we're still below a negatively sloping 200 daily moving average, even if we bounce, it could be a lower high before the next lower low. So this is definitely time to get a little more cautious and just wait and see what happens, because if the bond market can break out from here and get back above the 200 daily moving average, that means we may be reversing the bear trend and starting a bull trend, which is typically going to be bullish across the board unless the bond market is going higher for fears of recession. So I will warn you right now that on Friday we will get the unemployment data, and if the unemployment data goes higher, meaning more people are losing their jobs, it is possible that the bond market gets this bull breakout. But in that example, that would not be bullish for the stock market, because in that example, the bond market is going higher for fear of recession, and the fear of recession is bearish for stocks. So my opinion is that it's very important to watch the bond market here, probably just as important as it was watching the bond market in 2022. This is definitely a very important pivot in the bond market to see what it's going to do, and then associate that with the economic data that we're going to get starting on Friday, and try to make sense of it if it's bullish or bearish for the stock market. And that will help you get a little bit of a leg up on the competition, which are the other traders that aren't looking at this and don't understand it. So focus on the bond market here. This is going to be very critical right here on TLT at $90. If we get the bull breakout, it could still be bearish for stocks if it's based on a higher unemployment data read, which we're going to get on Friday. All right, so let's jump over to SPY. Today we were up 0.41%. We do have the bull trend with price action above all the moving averages. All of these moving averages are still positively sloping, so I'm leaving the price target up there in the 620s, and on the way there we'll obviously hit 616 first. So take it level by level. We need to break the previous all-time high, 616, and then 624. You're staying bullish as long as we can hold above 594. If we can't hold above 594, there is a bearish scenario, which would take us down towards 585. So highest probability chance is still going higher. Contingency plan on a break of support at 594 would be looking to get risk off for a lower price target at 585. But again, let price prove it, because right now we still have the bull trend, so all of the probabilities still favor that we're going higher, which means it is a bull trend until it's not, and the trend is your friend. On the NASDAQ 100 triple Qs, we were up 0.45% today. And very similar to SPY, price actions above all the moving averages, they're all positively sloping. The highest probability chance in the bull trend is that we continue to go higher. The brand new all-time high price target is up there at 546. On the way there, we need to break 530 and break the previous all-time high at 538. But more than likely, this is going to happen because it's the highest probability chance. And you're staying bullish as long as we can continue to close above 516 and or 510. The bear scenario is that we slice through 510 and start down lower towards 493. But again, that is the lowest probability chance. And if you're taking that trade, you need to cover if we break out to a brand new all-time high. And with the lowest probability chance, obviously it has the least likelihood to play out. It's only going to be a lot more probable in a better trade if indeed price does break down below 510, which it has not done. So below 510, we can get bearish, but right now we're staying bullish because it's a bull trend until it's not, and the trend is your friend. All right, and then quickly, I want to look at the AMD trade that I talked about. This one obviously had some sell the news after earnings, but that's not always a bad thing, especially if you paid attention to the levels that I gave you to buy at, because one of those levels was $108. And today, if you set up a trade from 108 to the high probability chance to hit 137, which I told you was a 95% chance, I think we'll hit 137. If you give this trade a 1.5 risk reward ratio, you are still going to encompass the buy zone all the way down towards 95. which means even if this trade does continue lower, you still have plenty of opportunities in here to go long and still have that 95% probability to hit the price target at 137. And it's well within a proper risk reward setup. And these trades over and over again will allow you to be profitable because you have the high probability to be correct with the right risk reward setup. And this is how you continue to be a profitable trader over time, because yes, you will lose some trades here and there, but when you win, you are going to make far more money than when you lose. And then last but certainly not least, in TSC Trade Alerts, we hit another brand new all-time high. We continue to make brand new all-time highs. As you can see here on February 5th, 2025, we are sitting here at a comfortable brand new all-time high. And this chart is showing you over the past 3 months. And I want to show you something very quickly of the benefits of being a trader is look how smooth this equity curve is from the bottom left of your screen all the way up to the top right. And yes, there's some volatility within our trading account, but I want you to remember we trade the TQQQ, and on the QQQ, in the last 3 months, there has been a ton of volatility. And this is the kind of volatility that can chew you up and spit you out if you're over leveraged and you're not using proper risk reward setups. So this is the QQQs for the last 3 months. And I can also show you the TQQQs for the last 3 months. You can see plenty of volatility in here. And then keeping in mind, this is the same thing that we trade over the past 3 months, a very smooth curve with all-time highs, even though the QQQs and the TQQQs are not at all-time highs. So this is the benefit of being a trader. As a reminder, you can get access to these exact trades that I'm giving through TSC Trade Alerts, where I give you the exact alerts of when to buy and sell and what percent allocation to be in for the TQQQ or the SQQQ. And you can find out how to join TSC Trade Alerts by clicking on the link in the description of this video. Year to date, we are already up over 6.7%, and we are absolutely destroying this market and crushing all of the indices by a very nice margin. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.